bring on board Ananth Narayan and talk about the rupee. Siddharth, I'm going to come back to you for an equity discussion. Ananth, hi, morning. Finally, some stability in the rupee, but you can't take your eyes away from that dreaded 68 figure. What's leading to this uncertainty in the currency market? And would you say that there is added pressure because of the cliffhanger in Karnataka?
Morning. Yeah, it's not been looking good for the rupee the last few weeks. I think it's been a bunch of factors and you can't all put it down to politics. Clearly, our permanent flows have started to turn negative. With oil prices going up, our current account deficit is the worst it was the last year in the last 5 years. And this year looks like even heading even more negative. Second, our capital flows, given global rates and global geopolitics and domestic politics, could be under question mark as well. So the overall balance of payments and the permanent flows don't look too good. Plus, we've had a situation where a lot of people are unhedged. You know, exporters who have sold dollars, importers who have not purchased dollars, FPI who invested in debt and are looking nervous right now, and some of them may be looking to get out right now. So the last few days have been pretty telling. Even when we saw good news emerging, we've seen buyers of dollars emerge and take the markets to new highs. RBI seems to be intervening in the market and trying to control the flow. But yeah, as of now, it still looks like a buy on dips market. Today is a good start, I guess, after yesterday's volatility. Possible that the RBI is there as well to douse this market. But at the moment, it still remains a buy on dips of $4.
But, you know, given that a large part of this weakness is also associated with what's happening with the dollar index globally, how much more would you give by way of downside risk? I mean, are we talking 70 sooner rather than later?
It's quite possible and can't be ruled out. And just to put things in perspective, even now our RER is in the region of 115, which actually tells you that rupee is overvalued, not undervalued. So it's true that this year the rupee has actually underperformed other currencies. But the last year, the rupee performed reasonably well against a whole bunch of currencies. In fact, so much so that I would argue that it's been hurting us by both our exports and getting our imports higher. So in a way, the correction we are seeing right now is probably good for the economy. And yesterday's trade numbers also indicate that a weakening rupee might actually be helping the overall trade deficit. So in a sense, allowing market, you know, the nervous speculative positions to get out while weakening the rupee might not be a bad thing. So if rupee does go to 70 over the next 3 months or so, that actually might be a good thing for India in the long run, especially since we have ample reserves to allay any fears of instability. The risk really, Aisha, is that if oil was to go to 100, which unfortunately can't be ruled out, we'll go back to being a fragile country all over again, and that's a whole different ballgame.
Currency 67.88 went past 68, but you know, it seems like the trend is one of downward adjustment for the local rupee.